Today, I'm going to talk about some stocks that I think are incredible bargains. I'm going to focus on some dividend stocks, but I'm also going to get into some others because I know how much a lot of you guys love dividend stocks. And then I'm going to touch on some option strategies that I implement and talk about how to use cash covered puts as well as covered calls. So I think it'll be a great video. In fact, I think it'll be the best video ever. You don't even know what we're doing behind the scenes, the conversations we're having, what we're actually doing, and we're going to win. We're going to win so much that you're going to get tired of winning. So stick around, should be pretty good.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Sunday. I hope everybody's doing well. We're having a really nice day. My wife went out shopping. We're going to go meet her a little bit later, have some lunch, and enjoy well, it was a little bit rainy today, but to be honest, here in Las Vegas, that's kind of nice. Um, what are we going to talk about today? Well, I'm going to start out by talking about some dividend stocks that I think are incredible bargains right now. The recent pullback has created some good opportunity, and I'm going to go into 4 or 5 of the ones I've been picking up, and then I'm going to talk about some non-dividend stocks and what I see going forward. Before I get into that, if you guys could do me a favor and hit that like button. If you haven't subscribed to the channel already, please do me a favor and do that as well. You guys know how much that helps YouTube's algorithm and it helps other people find the channel as well. Anyway, let's start out with T. Rowe Price. That's one of the ones I've been picking up. I see them as a great value. They're using less than 60% of their free cash flow to be able to pay their dividend, which is currently above 5%. Now, on T. Rowe Price, along with the other ones I'm going to talk about, except for maybe one or two, I don't really expect you to hit a home run. I don't expect these to be 10 baggers or anything out of the world. But as I'm getting older and thinking about transitioning more into dividend paying companies and more of an income account versus a growth account, and to be fair, the big correction we had the 2 or 3 weeks ago had me rethinking a lot about this and the type of risk I want to have on. I am a growth investor and I take on a good amount of risk, and I know that. At the same time, I think it's time that I should be rotating into some things that actually just pay a dividend and have some good steady income coming in order to be able to pay those dividends. Well, T. Rowe Price fits that bill. They make plenty of money to be able to pay a dividend that currently is a little above 5%, which is great return in my mind. If they do nothing but stagnate and sit around and continue to be able to pay a 5% dividend, that's okay with me. It's outperforming what a CD or a treasury could, unless the inflation gets worse and we end up seeing higher inflation. But I don't really think I see that coming going forward. I kind of see the economy continuing to slow. In fact, I think the tariffs are going to help to make that happen. So, despite people getting scared that they're going to cause a lot of inflation, the reality is they're going to balance out the supply and demand. So, maybe companies are making less sales, but their overall profits are still decent while the economy slows because things might cost a little bit more. I think T. Rowe Price fits the category of something that should be able to continue to pay that dividend no matter what goes on in the economy. They aren't a huge powerhouse in the industry. They don't do a ton of advertising. It's not something I see just crushing the market and doing real well. To be honest, if I was taking a shot, I think Robinhood is probably a great spot to be in. I think they might continue to grow their market share. I think adding gambling, which is really amazing that they were able to do that and skirt the regulations somehow to be able to do sports betting, and I'm guessing they're going to get into all sorts of things. I wonder if they'll even be able to get involved in political bets, which would be really interesting because I'd hate to think that people could sway the markets on things like that. Anyway, that's off topic. But I don't see T. Rowe Price being like a Robinhood or something, or even a SoFi, where I think they're going to, just crush it or potentially grow a bunch and they're a huge risk. I think they'll just continue to chug along and pay a decent dividend in the meantime. Number two on my list that I'm going to talk about is Prudential. What I like about Prudential is they shouldn't be impacted too much by what the markets do. They're an insurance company and their revenue stream is pretty consistent, so it should be pretty reliable and they should be able to predict what they're going to have coming in. They're currently making over $7.50 a year in earnings. Gives them a price to earnings ratio around 16%, which is pretty decent and on the lower end of what I've seen for them. I also expect that to be able to grow with their projections of what it's been. And they're currently paying out a quarterly dividend of $1.35 a share, which is pretty easily able to be paid with that 750 a year. Now, again, it's over a 5% yield for that dividend. Another company, I'm pretty comfortable that they should be able to pay that dividend, so that if we have a rough economy ahead or a good economy ahead, I feel like I can rely on that dividend. I also don't think this is going to be a huge grower in price. I don't picture them doubling over the next couple of years like some of the other things that I potentially look at. I just don't see those companies in that category. They're not a growth company. But I think what I'm looking for when we're talking in this video are companies that should be able to sustain their dividends pretty well. Now, the next two I'm going to talk about, though, I think I think really could hit it out of the ballpark on both levels. Because to me, their valuations are so low that I think we really could see some price appreciation, as well as the fact that they're paying a very good dividend. One is one that I've been banging my hands against the table again and again and again, and I will talk about again. And I've actually accumulated a decent sized position without realizing it because I've bought it in different accounts, and I don't feel like I have that big a position. But when I really add it all up, I really have dug in pretty deep, and that is Target. So I also tell you guys that so you know that when I make a suggestion, even though it is not financial advice, and I will tell you all about that later on, that you guys know I'm putting my money where my mouth is. I actually buy these companies, I invest in them as well. I am not making suggestions on things that I'm not willing to put my money in also. Now, that doesn't mean you should, but I didn't want you to think they're just flippant me running through the internet trying to find what I think looks interesting and then telling people about that, which is all well and good as well. But I wanted it also understood that these are things that I invest in, and Target is one that I've picked up a rather decent sized position. The reason I like Target so much is I've watched the quarterly reports, I pay attention to the earnings, and I see them as a pretty good company that fits in my realm of bad news on a great company. It's what I was banging my hands on the table about Boeing for almost, I don't know, 6 months or a year that people love to hate. And to be fair, it had a lot of pain along the way to where now it seems to be going higher, and I could see that continuing to happen with Target, but I do feel like the lows are probably in, probably. But I also think the valuation at this point is so low that it's hard for me not to see an appreciation in the stock price. And you're getting like a 4.7% dividend yield as well, which to me is phenomenal for a company like that. Their price to earnings ratio, if I remember correctly, is something like 12 on current earnings. And they're expecting to grow. They're expecting to grow at a faster pace than Walmart. But Walmart's valuation is significantly higher than where Target's is, with a much lower dividend. Like if I was one of those who had one of the funds that buys one thing and sells another, I would actually be buying Target and shorting Walmart because I see them in a similar space with a better valuation on Target than what there is in Walmart, and better potential for growth as well. Their ability to be getting into the internet space and their online sales are improving. They had such negative news with stores that were closing, then they were woke, then they weren't woke, then people were protesting, and everybody hates Target. Well, if everybody hates Target and their earnings are still as good as they are, what's going to happen when people start to like Target again? If you guys can remember, I don't know, it was probably 15 years ago when people were referring to Target as Target because they love Target so much versus some of their competitors, and the stock had a higher valuation. Well, now they're out of favor. Same company, nothing's really changed too much over those years, and that's kind of what I figure going forward. At some point, they'll be back in favor. The valuation in terms of earnings will be a little bit better improved, which is part of why I see the potential for the price increases on top of those dividend payments. So I see it as a great opportunity to pick it up relatively inexpensively. And if it starts to get above $120 a share or $130 a share, I'll use that opportunity to start selling some covered calls against the position on top of it. When I do that with a company like Target, I generally use out like pretty far out dated options. And my thought process is, well, if it gets there and I get taken on those options, I'm perfectly happy selling the stock there, and I'll get a little bit extra money in the meantime. So the other one I wanted to talk about that there's a little bit of risk in it, but I see the same type of potential as Target is Whirlpool. So their most recent earnings quarter, they made $1.25 a share, and they're paying out $1.75 for their dividend. Well, you can already see the problem. So why am I picking Whirlpool? Because just like ExxonMobil, years ago when they were going through their trouble, they were paying out a 10% dividend. Well, they've turned things around. The stock has, I think, tripled since then. Now, the dividend has gone from 10% in yield to under 4, if I'm remembering properly. Could be above 4, somewhere around there, and things have turned around in terms of their earnings and their profits. It's kind of what I'm hoping for Whirlpool. I do see a potential where they could get into a situation where they actually had to cut the dividend, but $1.25 is still a decent earnings for the quarter. They've said that the tariffs haven't impacted them as much as they expected, and they see growth going forward. In the meantime, the stock has cratered. It has fallen a ton, and at current prices, it is paying over a 9% yield, which is just outrageous. So even if they had to cut the dividend in half, it would still be a decent return on your investment for the dividend yield. And they're finally making decent money with ability to what they think is grow going forward. And I think they could end up in a position where they're making plenty to be able to pay the dividend, and you happen to get in pretty lucky when the rate was really high and have that for life. If that happens, I would expect to see the price to go up. So you'd get the appreciation in the value of your stock as well as continued dividend payments. I've picked up a decent amount of Whirlpool because of that. But keep in mind, I recognize the risk that at least right now they're going through a bit of a tough time, but I think they're getting to the end of it and should be able to grow from where they are now. And then the last dividend stock that I picked up that has a much lower dividend yield is actually not the last one, but the last dividend one I'm going to talk about before I talk about some others is Nike. Nike is so out of favor right now. I almost love getting the hate comments that I see in the section. And when I see other people on YouTube talk about Nike, they get tons of hate, how Nike is done, they're going to die, they're going out of business, so on and so on and so on. Well, meanwhile, they have collapsed to where they're paying a current price to earnings ratio of 18%. I get it. They've gone through a rough patch, and the rough patch might last a while. But you know what? At this price point, they're finally such a good deal, it's hard to look anywhere else or pass it up. I understand OnCloud makes an amazing shoe. I understand their technology is pretty cool. They're even coming out with something where I think it's kind of like almost like they spray paint your foot kind of to create like a shoe that fits perfectly. They're doing this for some of the Olympic athletes. I remember seeing some program on it. So they make a good product, and Nike has some competition. But Nike does apparel, they do all sorts of things. And if they can get their head back on to where they're actually growing and producing again and taking their market share back, eventually in time, usually these great companies figure a way through it and they end up on top again. It just seems to be the history of what really good companies do. Now, of course, they could end up being, the next Sears and just slowly dwindle and go out of favor. But I don't really see that happening. I think they've lost some direction on advertising. I think doing the Jordans was, something that turned them around previously, but they've become such a big company, it's hard to think that they're going to just go out of business and fail at this point. They need to just get on their heads right and figure out some marketing to become favorable again because the valuation is so cheap. If that happens, we'll see the stock go back up. Now, they're only paying like, I don't remember the exact amount, but call it 2.5% yield. So the dividend is not that big, but they're in a position where it's easily able to be paid. And I also think they could get things back on track and start growing again. The funny thing is, if you go back, I don't know, 2 or 3 years, Nike was like the darling and everybody loved it and it had a very high valuation. And a lot of people were talking about how high the valuation was and it didn't make sense. Well, that's really what's changed. They're not hated the way that the people hate them, other than the stock price has fallen, so people just think they're terrible. Well, maybe they were just overvalued for a while and still a pretty good company with an ability to make money. I think that's the case. I think now that they're out of favor and people hate them, I think good companies with bad news when people hate them are the things that are worth buying into. So I see Nike as a really good opportunity. And I actually put on a decent position in one trade in my set it and forget it account so that I don't pay attention to it if it has a rough patch for a while. I really think that that could be the case, but that I want to own them for 5 or 10 years, and that if I look back after 5 or 10 years, I'll be really happy with the purchase. I think anything under $60 a share for Nike seems very attractive for me, and I think that's a really good opportunity. I'd be kind of surprised to see it get below 50. I really would. Now, I've traded for long enough that I know anything can happen in the markets, so I wouldn't be like blown away, but I would be pretty surprised. I expect this to be the lows for them, and I hope they just start drifting higher while nobody pays attention and they don't really talk about it as much. To be honest, I hope it has a little bit of a rally, then it falls back down and people talk about bad news again, and it kind of shakes people out down here for a while before it just gets forgotten. And that's typically when things start drifting higher, is when they get forgotten. Don't really see too many people talking about Boeing anymore, and that's kind of my point. Once it gets forgotten, that's when it can tend to move higher. So I guess we'll see with both of those. Now, part of why I'm getting more bullish is some of the comments I'm seeing in other people's videos and how negative people are on the economy, comparing it to 9/11, comparing it to the dot-com bubble, comparing it to the great financial crisis, and saying how this is worse than any of those. Well, forgive me. I'm guessing that time has clouded people's judgment because I don't see right now as being worse than any of those. I also don't see it as something that can't be reversed if things get fixed. I actually was really surprised because usually I'm happy to make fun of Trump and some of the things he said. But I saw an interview today where he answered a lot of things really reasonably, and I kind of joked with my buddy Steve that maybe it was a puppet and somebody else was inside there talking and pretending to be Trump. Anyway, he made a comment about not running for a third term, how that's not anything that's legal, and he just finds it really flattering that people say that to him because it means they must really like him. He also said he sees that we'll probably end up having lower tariffs with China eventually, that it's his negotiation, and that he doesn't see an ability to continue to do trade where the tariffs are currently. So he was kind of like, of course they'll have to come down, but in the meantime, we have to keep them there to be able to have the conversations with them to find out what's more fair and get it in line with where it should be. This was not some threat of them keeping it high or this or that. It was a discussion back and forth about the reality, which is why I think this stuff can be reversed. And I don't think either Trump, the US, or China and President Xi want to cause a worldwide recession. And I think if they feel like they're getting to the point that things really are going to crack, that they'd figure something out to meet in the middle and find a solution that makes at least one side, if not both sides, a little more happy and continue the economy moving along. I just don't think they're going to get to the point where they just crush the economy because they're so stubborn. And I thought that before, which is probably showing how good the tactic is, especially the fact that we all got so scared that even the people who love Trump hated him all of a sudden because they see him as destroying the economy. Well, maybe that wasn't really the case. Maybe it was a negotiation. Maybe the tariffs will help discount our taxes. I guess we'll have to see going forward and trust the process. What's interesting is how many people started really disliking him, not trusting him, and even regretting voting for him because they see this big calamity coming that maybe won't come. And comparing it to 9/11, where Americans died, and it was the first attack on American soil since I think World War II, and so on and so forth, that we then went to war afterwards. I'm sorry, that was much worse. The dot com bubble where the NASDAQ fell over 90%, maybe not over, but like 90% over a 1 or 2 year period. And then the financial crisis in 2008 and 9, when we thought the banking was going to be destroyed and we were going to have this huge crisis on our whole monetary system. To say that this is worse because we've had a, I don't know, 20% correction, and to be fair, 10% was in 2 days, and so far the market has reversed, is just absurd. And then they'll point to transports and how that we've seen a slowdown and things look awful. Like, I get it, and I get that things could get bad, but it is not worse than those three events. Things have not gotten to that a point. So I think it's just that you're in the moment and things look scary. But remember the saying, stocks climb a wall of worry. Now, I'll make my comment now because it'll make sense. This is not financial advice. By all means, you need to do your own research and not listen to me or anybody on YouTube. Or I am on YouTube. I am just a guy on YouTube sharing my opinions and what works for me. And you need to do your own research for your financial decisions because they have to fit your financial portfolio, not based on what I say. And I get into it all the time, and I actually mean that. But I am bullish the economy, and I've bought some things. I did a YouTube short recently where I talked about that I bought some Netflix, and I actually put a decent position on. This week, I plan to cover half of it just because it's moved so far that eh, it's why maybe I should have bought it in my set it and forget it account, because I think Netflix is a great company that I want to stay invested in. But it moves so far in such a short amount of time, it's very hard for me not to get out of half of the position, put that money on the sidelines so that if the gloom and doomers are correct and we do see a recession going forward, that I have some ammunition to be able to pick up some bargains that I would picture coming around. Another non-dividend one that I picked up not that long ago was Spotify. And by all means, don't follow my lead on this one. I did it for the dumbest of dumb reasons. My son and all of his friends use Spotify the way that maybe our generation used Facebook. Like, they're not communicating on it. I don't want to compare it the wrong way because it's not the same, but it's where they watch their music, they go to podcasts. I don't even know what else is on there. I think he said something about like chatting on it, or either way, I don't know enough about the company. My thought process was, if there's all these 12, 13, 14-year-olds using that platform who are on there consistently, that gives a really long longevity for the company. Longevity. I guess that's kind of a funny phrase. Either way, that I see them being able to stick around for a long time and be able to grow. What I struggle with is the valuation is absurd. At the same time, I picked some up because of that and that alone, because sometimes those are just the things that just go and go and go. And if I put in a little bit, maybe I get real lucky. Um, that was my thought on Spotify. But then I went to the usual suspects: Amazon, Google, Meta. I still need to read Ben Wright's paperwork that he sent. In fact, I'm going to print that when we're done and see why he doesn't like Google and he sees them going, having a real tough time. I get that AI is going to change things, but to be fair, they're in the mix. They've got a lot of good engineers working on their AI as well. I worry about the stuff with the Department of Justice because if they break them up, I don't know if it'll damage them or if it'll release some equity, and it really could go either direction. As a shareholder, it could end up being really good, but it's possible that it hurts their ecosystem and it doesn't end up really good. And I'm not sure how I feel about that. I still love Meta. I was actually surprised. I didn't realize how well rounded Microsoft was. Meta is my largest position, so I was really happy to see how it's rebounded. Um, but to be fair, its high was still, I think, $740 a share. And as much as it rebounded, it's still off 15% from there. So it would be nice to see it continue back up to the new highs, which I do think is a possibility. I think it is possible that by December we could find ourselves scratching our heads with the market making new highs, which would be really amazing. It's not necessarily, well, it is kind of my prediction. We had enough fear in April when the lows came in that it is very possible that that was a really good low that just sticks, and we could have a V-shaped bottom if the economy doesn't stumble. And ask yourselves this, and I mean it because it's what I've been asking me. Is Amazon really going to have worse sales? Is Meta going to do worse going forward, or Netflix, or any of these others because of the tariffs and what's going on? Do we envision a monstrous recession where next year Amazon is having lower sales than they did this year? I don't think so. I think that the spending is going to continue. People are going to worry about a recession. They're going to rant and rave about the inflation because things might get more expensive. But as long as jobs stay okay and there isn't massive unemployment, which I get, we could have all of it, I think we continue to climb a wall of worry. And then the amazing thing is, somehow, the houses that are overpriced with the higher interest rates, if the stock market continues higher, are probably going to continue higher as well. It makes it very hard for me as an investor who lives in Las Vegas because the math doesn't work out to me as somebody who invests in homes. Like, I'm not looking for investment properties at these prices in Las Vegas. But when I do look around the country, and don't get me wrong, I don't want to own something out of state and try to manage it. And I don't want to grow and be that type of real estate mogul. Like, I don't want to own tons of doors, and it just sounds like a big pain in the butt to me. Either way, when I look around the country, I see places like Cincinnati or Cleveland, and I haven't looked in about a year or so, but Pittsburgh looked like incredible opportunity based on the values of the homes, what they rent out for, and the types of jobs and incomes people make. It was very in line with being able to profit by putting 25% down and getting the rents that seem to be going in those areas for the prices of the homes. I think they're just less desirable places to live. And amazingly, I think a place like Las Vegas, and I think like my buddy who lives in Montana, I don't know that that's ever going to change. I think COVID sped things up, and certain places that are more desirable to live, for lack of a better word, have just been found and are that and aren't really going to change. I mean, look at California or Hawaii that have been overpriced for decades. Do you really see that ever changing? And I feel that way about Vegas. I mean, we have great weather. We've added a couple of sports teams, the Sphere, F1 racing. We now have a Hollywood Studios that they've approved to come here, and they're building this huge center for go karts and all these other things. I'm watching the city continue to grow, and we have continued, you know, demand of people moving here. That's not the right word, but I know what I'm thinking of saying. But we have a consistent inflow of new people moving into Las Vegas that I think pushes the demand, and we don't have unlimited land to be able to continue to build homes. And I'm guessing we have limited water supply as well, so that they don't want to overgrow. But the population keeps getting bigger, so you have more demand, and the real thing that drives housing is supply and demand. I see houses coming to the market, but to be fair, I think it's a lot of people who've seen how much they've gone up in value and are listing them, but don't necessarily really need to sell. I actually have a friend in that situation that he keeps thinking of listing, and if he's going to list it overpriced, which is why you see these videos of people having to cut their prices down and being over optimistic of what they can get. Well, if they bought their house really inexpensive and they have a low interest rate and they don't have to sell, their attitude is, oh, prices are so high, I'll just list it for this, and maybe someone comes along and buys it. And that doesn't really happen. But it makes it look like there's more inventory than there really is, because it's not like those people really want to sell their house. Their attitude is, if somebody overpays, I'll be happy to sell it. But it's not like they really want to sell, or their pricing would be more aggressive. Does make for good YouTubes though, because then people point to the houses that think they can get that too and actually do need to sell, and they lower it to a realistic price and eventually get it to sell. But it doesn't mean that's where prices really are. Either way, I do think that Las Vegas continues to go higher if the stock market goes higher. I also think everything else does as well. And vice versa. If we have a real correction, I think that we could see lower house prices, and in that scenario, we'd probably see lower interest rates. And then probably the last thing I'll talk about, unless I ramble more. Oh, before I even get into that, I want to thank my wife, who I love dearly. I asked my brother one of the things I should do today, and he told me I should tell my wife how much I love her. And my son, tell you how I feel like I'm one of the luckiest people in the world. Um, I know a lot of people in tough situations who aren't really happy where they are. The thing I was going to talk about is the summer vacation that we're going to plan on going to, which just reminds me how fortunate I feel like I am. But I also think if you put good vibes out there, you get fortunate. I think if you're negative and you're constantly blaming the world, that's you'll get what you put out. And if you think the world is awful and that things are going to do poorly, that's probably what ends up happening. And if you just try to switch that mindset, which isn't so easy to do, that maybe things work out a little bit better. Anyway, I wanted to talk about the vacation a bit. So if anybody has any suggestions on things to do, I would love the suggestions. One of the things that I've grown to really love is travel. And before I get too old and my body hurts too much, because I'm getting old enough that my body does start to hurt. And I think about, geez, another 10 or 15 years, I don't know if I'll be able to sit on the plane that long, do the walks, do the other stuff. My back hurts, my legs. Anyway. Um, we're going to do another nice trip and we're going to Asia. So if there's anywhere that like you think we shouldn't miss, I'll tell you where we're going and we might have a little flexibility too. We plan to go back to Japan and we're just going to do Tokyo again. My son loves Japan so much so that he asked if he could take Japanese. So he's been taking some online classes and once a week he meets with this guy who helps him learn a little bit, but we're going to spend a week there. I kind of suspect that he's going to spend more time in Japan as he gets older because something about Japan that he just really loves. Don't get me wrong, it's a great country, but it's amazing how he's just attached to it. And then from Japan, we're going to go to China, which is where my wife's from. I'm sure we'll be in Beijing and Shanghai. Thinking we're going to get to see the terracotta soldiers too. And maybe we'll go over to the Great Wall. I'm not 100% sure. And then we'll definitely spend some time in Qingdao because that's where she's from, and her aunts and uncles and family are out there. So I imagine we'll go and spend some time with them, which will be pretty cool. And then from Qingdao, I'm guessing we're going to head over to Shanghai for a bit. From Shanghai, we probably go into Thailand, and we're definitely going to do Bangkok, and then we're probably going to go to one of the other places because we're not going to have a super long time there. And then I think we're going to end up in Korea for a little bit and visit Seoul in South Korea, but probably only for a few days. And then we're going to head from Korea back home. So if anybody has any suggestions or somewhere that we missed or something to do in any of those places, by all means, make some comments in the comment section. I love to travel. I'm really glad we found it. I watch all those certain ones, like I love the concept of slow travel. I don't think it's super realistic because I think if you have a kid, you need to give them a base and you need to have a home base. I also think traveling forever would get kind of old, and at some point, I would want somewhere to settle down. But I do like watching those videos and kind of fantasize of doing all that stuff. But keep in mind, it's one of the reasons that I think that currencies could actually have reversed and you could see a long term trend because I see a lot of those videos of retire here for only X dollars, whatever that amount is. And I worry that people who make those decisions don't factor or take into consideration the fact that currencies change over time. So, whatever you have in US dollars today, if it slowly changes where the dollar gets weaker over the next 10 years or so, it may not quite go quite as far as you expect, especially if there's worldwide inflation, which there seems to be. I mean, so just to off topic a little bit, my buddy from high school ended up, moving to Paris or outside of Paris. Healthcare, this and that, like he finds it a little less expensive. Anyway, when I talked to him years ago, he wasn't feeling the inflation when we were. He kind of said something through we talk on instant messenger often enough. But he asked if we were having massive inflation because all of a sudden it seems like their inflation was probably delayed. And he's going to the supermarket and seeing some of the things that we were complaining about the past few years when he wasn't feeling it before. I kind of wonder if that's what's going on with other countries. So if you've done this and you've decided to retire in Asia, and I picked that because it's one of the ones that I like to watch, whether it's the Philippines or Thailand or Malaysia or wherever, if you run into a situation where they're having inflation there, at the same time the dollar weakens and your dollar isn't getting as many units of that local currency anymore, you could find yourself in a really tough situation where you think you've planned accordingly, but you didn't account for the possibility that the currencies legitimately fluctuate, and they can go pretty far, just like anything else. They can move just like the stock market, just like bond markets. They can pick a direction and move that way for years. So it could be a slow and painful change, and a dramatic one where you just didn't plan for that. So be really careful if you're one of the people who's fantasizing about retiring and moving to this place. Make sure that your budget is really secure so that if there's a currency change over time, as well as some inflation, you're really covered. I would hate to I would hate to be in another country where I haven't planned accordingly to start running out of money, especially if they don't have the services that we do. I mean, part of the reason we're so expensive is we take care of people, and we have a lot of regulations to be able to run the country the way that we run it. Anyway, I think I've rambled enough. I hope you like the stock picks. I hope the housing discussion was interesting. And I hope you like the travel talk. And maybe some of you have some ideas for us. Have a great Sunday. I'm excited to see what the markets do this week. Again, hit that like button, smash the subscribe button, or the other way around. Hit the subscribe button, smash the like button. Make some comments in the comment section. Don't forget, this is entertainment purposes only. This is not financial advice. Have yourself a great rest of the day, and I'm sure I'll talk to you in the next day or two.